RSM itself is a large multinational accounting, tax and consulting business. We have around 41,000 employees across 116 countries, and in the UK especially, we're 7th largest accounting firm. Myself, I lead our retail practice for the firm in the UK, and I also sit alongside that within our real estate team, helping people make the right investments. And a large portion of what we do is advisory, so we help clients, whether that be through distress, through CVAs, or whether that be through flotations in terms of accessing shareholder funds for their next stage of their growth. And an increasingly large portion of what we do is look after funds and investment funds especially, helping them make the right decisions in data-led ways.
Okay, great. Bill.
So my name is Bill Kistler. I run the ICSC, which is the International Council of Shopping Centers, but don't be fooled by the shopping center part. We've annexed all kinds of retail places, as well as food and beverage, leisure, everything which I believe is the heart and soul of cities. And personally, I'm relatively new to retail. I've spent most of my career in other sectors of the property industry. I sound like this because, yes, I'm an American, but I've been in Europe 30 years. And I believe that retail in Europe is a model for the rest of the world. So I'm very interested to hear what my colleagues have to say today.
Great. Eric.
Eric Decouvelaere, good morning, everyone. I've joined CBRE Global Investor 6 months ago. CBRE Global Investor is one of the leading companies investing in real assets across the world. We have a little more than $100 billion of assets under management. My job at GI is to run the retail platform in Europe, a retail platform which is 16 billion euro of assets under management. To give you an idea, 75 shopping centers, and more importantly, hundreds of shoppers joining us every day in 17 countries. I'm not an investor, I'm a retailer. I'm definitely a retailer. I've worked in department store, and the last 14 years of my life I worked for the leading developer and manager of outlet shopping center in Europe.
Great. Herman.
Herman Cook, working at Meyer Bergman in London, working there as head of research. Meyer Bergman, a private equity investment management company dealing with investments in urban and mixed-use real estate and last-mile logistics. Currently on the management spread over 4 different funds, about 6 billion euros total asset value. And within the urban mixed-use framework, we strongly believe in retail. We will discuss that, of course, all in later detail. But looking to retail in the urban fabric, retail and F&B as, let's say, the place where people meet, what gives light and identity to streets. Imagine cities without retail, without F&B. I think from an urban planning and from an urban development point of view, we have a real problem. And besides that, as it has been said, people will continue to consume. And the key reason for cities to be in place is the marketplace. So retail, in that sense, will continue to exist in the future.
And just if people don't know Meyer Bergman, in terms of geographic location, where are you investing?
Meyer Bergman, we are mainly investing in Western and Northern Europe, also in a little bit in the US. Our focus is on the core cities, so read capital cities and the largest secondary cities.
Eri, thank you for joining us.
Pleasure.
Just give us a very brief kind of overview on yourself and where you sit in this retail side.
I do European research for Savills, so one of the sectors that we obviously closely monitor is retail within the European context.
Perfect. And just so I can check, can everybody hear? Well, can you hear well? Do we need higher sound or? So could we bump the sound up? That would be great, thank you. Good. And if you've got questions or you've got views, the idea is that you share those, so if there's questions you've got, just raise a hand or shout it out with whatever's necessary to make sure that you're heard, and that we've got an excellent panel here to share their views, so please do ask any questions that you've got. Good. Maybe Eric, just starting with you, in terms of the research side, how do you see, I mean, we've got economic growth in some parts of Europe, maybe less so in others. How do you see that sort of general macro picture in terms of the retail side?
Well, in terms of the economic growth, we know that it's slowing down across Europe. It remains positive, though. Like retail spending will remain positive. The Eastern European markets are performing better than the Western European in terms of growth, but obviously we have several very affluent countries in Western Europe that still people can spend. The question is how they spend, where they spend their money, and I think that's what is the main thing we're looking at. So people are spending more in experiential sectors, as it were. If we look at the retail sales, they grow like by 2% overall, but the sectors that are related to experiences, like holidays, eating out, takeaways, health and beauty, all these sectors, they show much faster rises in the past few years, and we will expect that to happen over the next few years too. And that's one thing to notice in relation to how we maybe redesign our retail spaces to cater for these needs.
And Eric, you mentioned that you've obviously been from the retailer side as well, looking at that. How do you see the current trends in the market and the changing face of retail? How do you see that?
First, it's great to be in retail today. It's great to be in retail today because we were falling asleep in retail, I believe. You know, we were discussing with Bill, we were in a very supply-driven model. Now we are in a demand-driven model. And the big trends are, one, we have a new channel, obviously online, and omni-channel is the new norm. Omni-channel is a given. In terms of consumer, the consumer is changing. And I could elaborate, but I'm conscious of time. But many changes on the consumer. The retailers now are proactively adapting, I believe. And last but not least, the landlords are trying to be much more reactive to all this. So the key three change, consumer will be pace and rhythm of change. You know, retailers will be, store is becoming almost a media, a place where you display. So fewer store, but better store, bigger store. And for landlords, we now realize that it's very important to collaborate much more with the customer, with the retailers. So collaboration, a fewer store, bigger store, and for customer 24 hours 7. Always news on the pace.
And Bill, have you seen, I mean, it's obviously when you look at the ICSC, very focused on shopping centres initially, then there's been a change towards focusing more on retail in general, and now there you're mentioning focusing more on, I suppose, retail at its place in the heart in the city. Do you think that's the kind of main trend going forward, and is that both for the retailers? Is that what they're looking for? Is it consumer led? What's driving that?
Well, I think it's all of the above, and Eric stole most of what I was going to say in terms of trends. But I think I completely agree, and I didn't mention in my intro that I'm also A, not an investor either, and B, a recovering architect. So the return to the importance of place, creativity, and innovation, and the fact that not just the retail sector of the property industry, but all the others, resi, office, became very siloed over the last 30 years. And I think what we see happening, and we have this benefit of being in a perch, is a fusion. And label it mixed use or anything you want, but I think the catalyst in that fusion is retail, broadly speaking. And without great retail, it may only be 10% of the project. The rest may be resi, office, hotel, hospitality. If you don't have the mix right, and you don't have that catalyst, you're not going to have a successful project. So I think the investor community may underestimate the importance of retail today if they look at the headlines of a particular retailer that's struggling. And what I think I see happening is a shift from the bricks and mortar hardware business, which we've been in for forever. We were build it and they will come, to more software. It's more about what happens in the bricks and mortar. So our developer friends are having to think more about not just building it, but what happens in it, and curating that activity, not just the mix of tenants, et cetera, but making sure there's something exciting happening.
I can see you're eager to come in on that, Herman. So Meyer Bergman particularly, before you were at Multi for a long time, big shopping centre developer, and now Meyer Bergman, where it's much more of a focus on mixed use. Are you having to do the sort of curation that Bill was talking about? How's that influencing the developments that Meyer Bergman are working on?
Yes, absolutely. I mean, that curation, that's what we are very much involved in. What you already mentioned, retailers, they want to have better stores, they want to have bigger stores. Stores should be able to accommodate all multimedia digital sales technologies. So in other words, more quality, more size, also the placemaking, identity, authenticity. So all those factors come together, and at the same time I think retailers are also very curious, very aware of price, cost. In other words, they want things to be better, and also looking to the business model, looking to the operations, preferably also at a lower price. And of course what we see happening in a lot of cities, and that's with Meyer Bergman we try to tap on. If you for instance look in London, of course Bond Street is by far the most expensive retail street in Europe, and that will probably stay. But you see more and more retailers trying to tweak. Can we go to another location? Can we go to another area? Regent Street, for instance, was relatively run down 20-25 years ago. If you look at it today, I would say it's a secondary luxury pitch, almost parallel to Bond Street. But even further away, going to gentrifying neighborhoods, going to neighborhoods where there is heritage, where there is specific buildings, where there is architecture, where there is upgrading to happen. Borough Yards, for instance, London Bridge, look at Coal Drop Yards next to King Cross Station. Retailers looking for authenticity, quality, also a meeting place setting, but away from the most expensive pitches and the more decent prices. And I think what we are going to see is, in that sense, well, it's not only a polarization, but a focus on prime locations, but at the same time, a kind of gentrifying upcoming locations, new identity, urban qualities. And with Meyer Bergman, obviously, Borough Yards is for us is an important project next to the Borough Market. Whiteley's in London, that's also a location. We try to tap on that, let's say, upcoming location, quality, identity, neighborhood concept, away from the most expensive prime pitch, but at the same time, offering that cater, placemaking, combined with quality retail space to serve the people.
And Andrew, you're obviously mainly working with clients out of the UK, and the UK, particularly actually more than continental Europe, has suffered both from negative headlines, but also a lot of change in the retailer landscape. Some retailers going bust, various things happening. What's your perception of that? And do you think the market is split between those models that are being successful and those models that are less successful, and that there is this swap over actually that Eric talked about in a way between some models that just won't work now, and there's got to be an evolution?
Yeah, so I think the panel's put it quite neatly so far. Across the rest of Europe, bigger format stores are definitely the way that people are going. So the UK in the last 12 months or so has had about 30 million square feet of retail space handed back to landlords, which is quite a stark amount. That's about 1,000 stores or so, and that's a seismic shift. The reason behind that is, in the UK especially, the actual quantum of online sales has gone from 4% about 10 years ago to about 21%. And what that means is people have just had to change their channels. Talking about the bigger format stores, in London, 1 in 3 stores are less than 1,000 square feet, and that's placemaking led. And I think that word will appear more and more, and as people develop centres into the future, that's absolutely the way to go. And I think what you're seeing is stores no longer have to hold the stock levels that they used to hold. So what you're finding is that final mile, you go in, you try on, you order, and it arrives at your home. That's the shift. That's what consumers want. And brands are able to access consumers directly. So the fact that your Nike, your Adidas, your Jack Wolfskin, all of these very well-known brands are taking their own stores, that's the future. You're not going to see department stores going forwards.
And Erin, in terms of the research side, when you're looking at Europe, are you beginning to see different trends in terms of the investment side, whether that's towards these smaller stores, whether it's towards renovation versus new build? What are you seeing in the market?
Well, the UK is a market which probably behaves a bit differently than the rest of Europe. It's ahead in the cycle because of the higher penetration of online sales, because it has reached close to 18%, whilst the rest of Europe is with the exception of Germany, Netherlands, France, which are above 10, it's below. So you have different degrees of development of the online sales and then different impact. So on the one hand, in the UK, there is more focus on redevelopment, and with the repricing of assets, that becomes an interesting proposition as well, because assets have become, yields are becoming higher, and maybe some better returns can be made through a bit more active asset management, obviously. In the most developed, in the more developed markets in Western Europe, I think, Germany, France, Benelux, I think they start realizing that this is going to come as well in Europe. So landlords are thinking about it, and they're trying to think ahead what to do. There are markets in Europe where the luxury high street performs better than shopping centers. For example, we have investors that might avoid the shopping centers, and the yields might be softening, but the key high streets in Europe with the luxury element are performing better, like in Paris, for example, or Munich, and that is driven very much by tourism, because 7 European cities are in the top 25 most visited cities in the world in terms of tourism. That's a very high proportion, and very much big part of it is led also by Chinese tourists who go for luxury. and the third thing that I would like to mention is that in some markets we see the retail park segment performing better than others. In Ireland, for example, there is a residential boom, so retail parks are performing better, and investors like them, and still the returns that can be made there are a bit higher. One last thing, sales and leaseback. The last year we noticed that sales and leaseback made a big part of the investment activity. And that suits both retailers and investors. Retailers get the money to invest back into their businesses, and investors get a bit of a longer-term secure income.
Okay, good. That's interesting about sales and leaseback, because that may be an interesting trend, possibly. Eric, I just wanted to pick up with you in terms of the investment strategy. How has that changed? How has that evolved? What are the things that I suppose you as CBRE Global Investors are looking for when you're looking to buy assets within that retail sphere, whether it's shopping centres or outlets or...
Two things there. The first thing, there is clearly a disconnect between the investment community perception at the moment and retail. The disconnect, everybody agrees on it, and we strongly believe that we can find opportunities in retail. But to find the right opportunities for our clients, two conditions. The first one, whatever it's high street or shopping center, is to ensure that those assets will welcome enough footfall. So obviously catchment, competition, existing competition, and connectivity of the asset are the 3 C almost, which are a condition to have a successful investment. The second fold is the management. We are convinced at CBRE, we are very pleased to have our research, which in this macroeconomic time is very helpful. We have 17 locations across Europe, to know what's happened on the field. We have a very good team of colleagues structuring the product for our client, but at the same time, we have a very strong team of operation and asset management, because at the end of the day, asset management in retail will make the difference. So to conclude, very discerning when it comes to investment, and very intense when it comes to asset management.
Bill, one of the things, I moderated a panel at the ICSC Innovation Conference last week, I think it was, 2 weeks ago in London, last week, 2 weeks ago. And there was some very good insight. I could only be at that one, but maybe, Bill, were there any kind of key takeaways from that, given that we are in the Innovation Hall, that you wanted to share?
Well, I think the very word innovation, I found, and we struggled in the program, what is innovation? And it tends to now be thrown around in almost in a cliche way, and when people think of innovation, they tend to drift towards tech and e-commerce and other things. But what I was really excited about in the program was the fact that innovation permeates all aspects of all the businesses, the different segments of the industry, whether they're investors, how you run your business, what kind of people. That was, I found, a very interesting conversation, that the talent profile, we used to be a very transactional business, project management, get the deal done, get it financed. Now we are shifting towards more of the hospitality model. Your former rival uses the term, instead of customers, guests at their centers, calls their, use that too?
I did use guests.
Calls their employees cast members. So I think the whole notion of how our industry responds to its customer, whether they're tenants or whether they're actual customers, is changing. And the innovation that has to occur in terms of the type of people that work for those organizations is a challenge that I think many organizations are dealing with. The last point I'll make is we had a session on a piece of research we did called the halo effect. And to your point about the impact of e-commerce, I think that is what the press has seized on as the boogeyman and what's affecting retail. What's interesting to see is that some of the pure play online guys, which everybody wonders how they're making money, are now realizing when they open a physical store, and we all hear about Amazon and Alibaba, but even Untuckit, this shirt business that was a pure play online company, is opening, I don't know how many stores in Europe now. They see an uptick in their online sales in the catchment area where they open a store. So there's, again, the fusion word. The online and physical retail aren't necessarily enemies. They're complementary. And I think that was a message that came out of the conference that I found very interesting.
Good. Yeah, there was. Did you want to pick that up, Andrew? Go.
Yeah, if I just build on that a little bit, if your payment service provider is somebody like MasterCard can tell you the geographic location of where your customers are to know where you're going to go and open your store. And that halo effect online means you can effectively pick a pin and drop within 2 or 3 kilometres exactly where you need to operate to then build your sales out. And because you've done it in other cities, you know exactly what the return is, how long to leave the store open before you then either take dramatic action and get bigger, or other dramatic action and close it down. And that's led to shorter leases as well, because you want flexibility at the outset.
Yep. And the flexibility area was, but the session also looked at new innovative market structures coming in, particularly for food. So there was Mercado Metropolitano, which I then hadn't been to, so I sent my daughter to because she lives in South London, and so I have photos of it, and it was apparently fabulous for anybody who's in Elephant and Castle at any point in London. But what was interesting about that was that it was a change in terms of people saying that they were curating it. It was food-led, it was entertainment-led, it was about experience, but it was about making money as well. This was a commercial operation. So it had moved from being something that was kind of up in the clouds as an idea, but it really was genuinely creating a different sort of approach, which I thought was quite interesting.
So after the financial crisis, retail has been the only sector that was able to generate growth because of indexation and all. And it seems to be shifting now, right? Office, logistics, residential seems to get the higher growth potential. And I think that's why everybody now is, retail is out of favor. I think the big question mark for me is, where do you see the ability for landlords to create growth in your rents and in your income? And with what capex is it associated with? Because I think this is where the big fear is, that what you're talking about, all this innovation, costs money, and at the same time retailers don't want to pay anything. So I think you have these pop-up stores having shorter leases, all this kind of stuff. I think this is where I'd like to get your opinion, where you think things are going.
That's the very difficult question. Because we already discussed, online, offline, they are not enemies, they will go well together. Physical retail and online shops will exist next to each other. But simply the bottom line is, when I go to a shop, I notice more and more often that even in a shop I'm somehow pushed in an online deal. Because, for instance, they don't have my size, or they don't have my color, or the type of product I want is not available. So online is there to grow. And how do you, of course, make money? We are used to a world where basically the value of most of the retail spaces were defined by turnover. And if the turnover is not made in the store anymore, how do you value the rental value of that store? Now, there's a lot of research has been done about that. There are ideas, but firm conclusions are not there. High street is probably the easiest one because store values are mostly based on footfalls. But how to make money, where to find capex, and there's a little bit also our strategy. I mean, what you were saying about department stores, actually that's exactly the reason why, for instance, we like department store properties. They are relatively big, they have a lot of floors, and when you look at the average rent value, it's not too high. So we like particularly those department store buildings where there is a downsize operation possible, where there is a possibility to add other functions in that building, basically transfer the upper floors in residential offices or other functions, also in the philosophy of urban mixed-use property. Yeah. What do you need for that? Of course, that's an undermanaged department store property. You need a city where basically urban planning, urban policies understand the value of urban mixed use. You need, of course, aesthetically a kind of building which adds value, and of course a strong location. So that pond to fish in is, it's very small, and there are a lot of players fishing in that very pond. But obviously, how do we try to create that value is actually transformation of functions, upgrading of buildings, undermanaged properties, and in that sense, come to a higher rent per square meter, per square foot revenue. That for us actually is at this very moment almost the only way, because if we look at, let's say, the rent histories of a lot of high streets, we have had basically a very fat history behind us of fast growing rents, and also retailers dispersing to different locations, looking to cost effective alternatives. That's a process which is going to continue as well. So in that sense, improvement, transformation, upgrading, that's where we believe we have to look for capex, and that again goes back to active asset management.
Yeah. And how practical? Sorry, Eric, go ahead. Yeah.
Oh, sorry. Yeah, maybe to supplement. I'm in agreement on departments, but no, I believe our industry has been used to quite an easy ride, to be quite honest. And when you look at it now, we need to work. We have moved from location to today footfall. And when you have footfall, it means you have location plus intense asset management. And I see our business, at the end of the day in retail, what do? We buy the time of the people, of the guests who come to visit us, and we sell emotions, whatever these emotions are. And in order to do this, it's interesting in your question, you mentioned capex, because obviously we are people of real estate, but I'm as much attentive with my colleagues at GI to OPEX as to CAPEX. Because at the end of the day, what will make an attractive proposition to our customer will be the mix that we will deploy to make them come. So then we go to rent. You know what? We have a project where our rent are still increasing against the market trend, a country trend, because those projects are really successful. Because people visit those projects. So I believe that for us here, the trick is to be very discerning, obviously to use the macro research, but to use as well our micro approach of each asset, whatever it's high street, shopping center, to pick the right investment. And this is what we are trying to do.
And how, this is for anybody else, how important is, it was mentioned earlier, but things like leisure, things like food and beverage, that in terms of creating the experience and therefore driving footfall?
I answer that and a question that, again, responding to the prior question. First of all, the department
Everybody
store,
wants to answer your question, don't they?
The department store story, one of the presentations you missed the week before last was about how the people who are acquiring and redeveloping shopping centers are slicing them for workplace, for leisure, for other activities, even resi in former department stores. So I think that is critical, finding that right mix within what was once a department store, or even a shopping center. I think the shopping center developers are looking for alternative uses that they can, whether it's even education, healthcare, other activities that can occur in what was once pure retail space. But back to the question of the model of what happens, I think, and the halo effect, the nature of what happens in a store and then how you monetize that. The online guys are seeing that their biggest expense is distribution and a lot of returns and all that nonsense. So the click and collect is now morphing into a place where you can not just click and collect, the amount of store space dedicated to becoming a distribution point, and then getting the retailer to recognize that that's a cost savings versus their former model of an out-of-town logistics center. So I think we're in the early stages of how you quantify the effect of that fusion of online and physical retail.
So it might be worth, for anybody who didn't pick up the question, so that was really what's going to happen to everything in between, particularly when you're looking at secondary assets. Is there going to be a crash in value, particularly for that segment of the market?
Yeah. Look, I think it's good to look into the UK and maybe look at our latest report of reimagining retail. There are some inspirational examples and case studies of places and locations and schemes that would not perform, and that with actual, hard work became quite successful. And they were not based just on retail, but they were based on a more creative approach of incorporating all these things that you just mentioned that we are discussing. I mean, when you discuss about the prime obvious locations, things are easy. But when you are discussing about these secondary locations, then it becomes a case-by-case example where you need to study the community trends, what the community needs. You need to work maybe with the local authority, and also maybe, like if you have an underperforming asset, firstly to expect to maintain its value, and when it becomes successful, then to create additional value. And that has happened in some schemes where additional leisure, new ideas around esports, competitive socializing, health and care, food and beverage, we know it already. I mean, you need also the operators to come in and believe in it. The thing is that it probably needs a little bit more long-term planning, in the sense that in the beginning, as I said, you maintain the value, and when the concept works, then it adds value to the whole area around, rents go up, people come in, and that's how basically you turn around the project. I mean, but it's not easy, and cannot happen overnight.
I'm conscious that we've got about 2 minutes left, but I know that both Herman and Eric want to come in on this, so...
Well, then I should keep it short. Well, most dramatic scenario, of course, examples also from the UK, but there are also examples in the Netherlands, I'm sure in other markets, simply where properties are being sold, I would say, for almost like €1, £1, with the sole purpose to make them vacant and go for a full redevelopment. So in other words, the investors ahead of them in time, they took the loss. On the other hand, also a lot of examples, like in Spain, also in the Netherlands, those guys lucky, location, catchment, but a big parking lot around it, looking for redevelopment opportunities on site. Also on a lot of UK retail parks, there are also studies being made to change part of it in last mile logistics. But again, use the space around it to add different real estate, different value, and by that sense, balance, let's say, the loss and create extra value. And I can go on for a long time, but I think I should now give it over to you.
Fully aligned to what you just shared. Fully aligned. At the end of the day, what is our job today? First of all, when I look at the portfolio I have under my responsibility, good choice have been done in the past. That's great. But I think our job is threefold. First, we need to reallocate space, for sure, and we need to we need to focus on differentiation. We cannot serve to our guests, our targeted guests, the same old. And once we have done this, in order to do this, we need to understand the customer. And clearly, I think that's the biggest change in our industry. We were opening square meters, and now we need to welcome people, in a nutshell.
Okay, great. And just as a final thought from each of you, if we hold this again next year, as we will, what will be the biggest trend that we'll be talking about in 12 months' time? Who wants to start with that? It's a vicious one to start with, I know. Andrew, let's start there.
Oh, thank you. I just think if I take the UK as a bit of a microcosm, so smaller format, boutique stores, lots of experiential stuff, and I think you'll see, it's called the lipstick factor. You'll see people spending on health and beauty and things that make them feel good, and they're going to spend less on big outlays because of the economic uncertainty. That's the way I feel.
Okay, Bill.
I think we've touched on it in several different ways. I think it's going to be experience of this, what comes after omnichannel? What is the kind of next evolution that is the real, I keep using the word fusion, of the model for retailers of how do they connect with customers that brings together the two sides of that coin, the online and the physical, and what implications does it have for the physical from an investment standpoint? How do you monetize, rent, all of those things?
Great, Eric.
I will cheat, I have two.
Okay.
One thing is technology as an enabler, people as a catalyst. And this is what you say, you need people. Physical retail is something emotional with people. We need to train, we need talent. This is one thing. And the second thing is sustainability. Everyone speaks about sustainability, but now we need to walk the talk genuinely. I was amazed to see the last G7, to see all those brands going to all those head of state, and it was going from H&M to Hermes, going to say, we want to walk the talk. And if we don't pay attention to this, I think we will be out of the equation. So this will be next year's theme for me.
Great, Herman.
Well, of course, it becomes more difficult to add something to this list, which are all relevant topics. But, well, you know, I think looking to purely the yield developments, yield shifts, the upward ticks in the secondary locations, whether it's high street, whether it's shopping center, it's advancing, I would say, across Europe. I think in the UK it starts to reach levels that you think, hey, you know, is it a burden or is it starting to become an opportunity? I think, you know, indeed, what is going to happen with the locations in the middle and how can we solve those? I think that's going to rise on the agenda.
Great, Eri.
And if I can complement to this, I think we will be discussing what will be the complementary uses to retail. The past few years we were discussing a lot about the rise of F&B. I think we're going to see new concepts coming in, mainly related to leisure, complementing retail.
Great. And thank you, everyone.